welcome. I'm your host, Henri Arslanian, and welcome to this other exciting episode of the Future Money Podcast, where we're going to talk with Xapo Bank, Mr. Joey Garcia, the Director and Chief Legal Officer of Xapo Bank, and really going to talk about the intersection of banking and crypto, and really how does a crypto bank of the future can look like. A lot of exciting topics. We're going to jump into it today. As all you loyal listeners know, my goal with the show is very simple. It's to go deep in some of the biggest ideas, trends, and developments we're seeing in the crypto space, and hopefully empower you with this information and then let you make your own decision on what their impact could be on the future of money and the future of finance. Without further ado, Mr. Joey Garcia, who joined us today. One fun fact you may not know about Joey, and not only he used to be a rugby player, he played in leagues in Argentina, Spain, and UK, and he's also a kite surfer. By the way, a very interesting thing that we see many people in crypto, they're into kite surfing. And my favorite thing that people don't know about Joey, he's done 3 full Ironman events. You need to be an Ironman to be in crypto, but Joey, I guess you literally do that. Great to have you on the show, Joey.
Great to be here, Henry. Really good.
This episode is powered by Xapo Bank. Experience the future of banking with Xapo Bank, the first fully licensed and regulated Bitcoin-enabled banking group. With Xapo Bank's all-in-one app, you can grow, transact, and secure your Bitcoin. Earn annual Bitcoin yield paid daily on your Bitcoin and US dollar savings, plus cashback on your card spending. Or instantly send and receive Bitcoin with the Lightning Network and seamlessly transact in USDC, USDT, US dollars, euros, and pounds. All this is backed by rock-solid security, including military-grade Swiss bunkers, cutting-edge digital protocols, and strict regulatory oversight. Sign up now at xapobank.com/capsule or check the link in the episode description.
Well, Joey, before we jump right in, there's so many topics I want to discuss with you, really about Xapo Bank, but also about the broader industry and about banking as well on crypto. Can you maybe share with our audience a bit more about your personal background and also how you got into crypto, but also then more about Xapo Bank as well to give our audience a bit of background?
Sure. It's a really interesting story. So I'm a lawyer by background, but the sort of back in 2013, 2014, I met Wences, the founder, sort of chairman of Xapo, who anyone in the Bitcoin space will know. Wences, he was doing a tour around the world, traveling stuff, looking for places to domicile certain parts of the business. He came to me. I don't think I'd heard of BTC, of the Bitcoin protocol ecosystem. And he started talking to me as a lawyer. We talked about a lot of stuff, spent a few days together. And he started talking about the future of this industry and where it would go. And he talked a lot about law and regulation, which I found a bit surprising. Obviously, now everyone takes that a bit for granted. In 2013, 2014, everyone thought he was crazy. He gets a lot of things right, which is pretty unbelievable. But so we started that conversation. I approached back then the government of Gibraltar, very small jurisdiction, but small jurisdictions have that power, right? They can move very, very quickly. They can adapt. They can take advantage of situations and move policy, move law, move regulatory standards much faster than bigger places. So that's what I did. And obviously back then, go and speak to a regulatory or government authority about regulating or creating a regulatory standard for the crypto ecosystem, and everyone thought it was a bit crazy. And that's what started the journey with the Xapo group. But Xapo were back then the biggest Bitcoin custodian in the world, so by some way, the original sort of Fort Knox of Bitcoin in 2013. And they've always sort of been on the forefront of developing that. So it was, the first to issue the Visa card linked to your Bitcoin wallet address, the first to obtain its full-blown e-money license to provide, users the security of holding their fiat assets. And then we took the step to go for the full banking license. So providing the proper crossover and intersection between the financial service as well, the security of a very, very simple and safe bank account, but in a way that's adopted to integrating with not just blockchain technology, but allowing users exposure to Bitcoin. Because we believe in the Bitcoin ecosystem and value proposition.
It's very interesting you mentioned the Fort Knox, by the way. I remember when I first got into crypto as well, one of my first wallets was the good old Xapo wallet that we used to have in that fort in that Swiss mountains. That was the big story back in the day. Huh?
Yeah, but back then, not everyone was talking about. They didn't
Yeah.
really know what cold storage was or offline systems were, or how they operated. So, we were pioneering back then, and now, you asked me, Henry, at the beginning, or banking intersections. Everyone knows how difficult it is to deal with banks, and while some, big names, is all public information. Whatever, HSBC can introduce like cap limits on transactions, or JPM Chase can introduce outright restrictions, whatever it might be. We're going the other way. So we want to bring the ecosystems together and to match the standards of what a bank has to offer with what we offer to users who want to acquire and hold Bitcoin. So we're merging those two, and you've seen this for years, Henry, as well. I mean, every time there's a new asset or there's a new technology, every time we can use hundreds of examples that I'm sure everyone listening to this has heard, but that's what we think of the Bitcoin ecosystem as. Some people talk about the internet, or they use whatever the language of the internet and TCP/IP and all of that stuff, and we believe in the next stage of that technological evolution, and we want to allow people to use the technology in an efficient way, but also in a way that's connected to, we can talk about cold storage facilities today and all the rage around self-custody and everything else. We have a very different view to that, which is pretty interesting, but it's about offering people access in a secure way that allows them to protect and grow their wealth in the appropriate way.
So, Joey, not to be too salesy, but I want to, there's many things I talk about, but maybe for the benefit of our audience, again, can you maybe explain to them practically what does Xapo Bank do now, right? If somebody comes and signs up, but also you're mentioning about the future, right? How do you see a Bitcoin bank of the future will look like in the next 5 years, for example?
Yeah. So, there are two parts to that question. The bank of the future point is, back in the day, we would say we believe we're there to allow a user to protect and grow their wealth. So what we offer today is a US dollar bank account, savings account, earning your 4.6% in Sats and Satoshi. And we offer integrated to our broker dealer in the US, stock pick and stock selection. So very, very simple, but ways that you can expose yourself to classic markets, hold an interest-bearing account, and hold your assets safe. We have no debt, we have no borrowing, we have no lending. We're crazy overcapitalized. It's very, very narrow banking focus. We're not in that fractional banking world where people get very nervous. So we've done that on the USD side of things because we believe that it is the most secure currency that people want to gain exposure to, and we believe exactly the same on the crypto ecosystem with Bitcoin. So we believe in Bitcoin as a unit of value. We believe in its core functions and purposes. We believe in the concept of a decentralized network and unit of value based system that isn't subject to any direct control, but we want to allow people to gain secure access to that instrument and that asset. So it's USD and it's BTC. We did not jump on the crypto bandwagon. We did not start getting into ICO universe. We did not become an exchange. We did not offer trading pairs. We didn't even touch base on the Ethereum network. We're Bitcoin believers because the value proposition is about protecting and growing your wealth, and that's why we've been pretty right so far since 2013. So.
It's very interesting. I think you guys are not only one of the oldest crypto companies out there, but it's very interesting. You guys are stuck to that mission of Bitcoin and offering at the same time US dollar accounts and access to stocks and stuff, but also to that purpose, which is very interesting. You mentioned,
and you say just to jump in, really, like there are lots of people in lots of technology. I think I've used this example before. We've heard the sort of the stories of Amazon and eBay and all of these guys at the beginning of time when they became listed companies. They had like similar market caps, and you had people, the Amazon guys very, very famously made a decision despite hundreds of advisors and specialist groups saying, you need to offer telecoms integrated services to manage and process orders and deal with returns. Telecommunications, this has to happen. Let's set up help desks all over the globe. Let's all do that good stuff. And and they didn't believe that. They believed in the internet. They believed in building a website and to have everything interact and integrate through. And they, if you look at the value of Amazon when they listed and eBay, and now you look at the same values of those same companies today, it's a really interesting story of mission. And we kind of use that example in the Bitcoin context. We're very linear in believing what it is and what the technology is there to advance and deliver, and we'll keep to that. So yeah.
But on the not to challenge you a bit on this, but of course, I think that a lot of the Bitcoin maxis who listen to the show would love it. But don't you believe there's also a lot of, let's say Ethereum, for example, there's a lot of things that actually from smart contracts to other functionalities. I know now there's obviously, things being built on the Bitcoin network, but don't you think those could also be beneficial to this decentralized world you mentioned, where a lot of services that are currently being offered by centralized banking players could be offered via using crypto or blockchain technology?
Yeah, I agree. I completely agree. And I've seen many. I've advised and worked with many of the groups, the largest groups in the world in that space, as well as the Bitcoin L2s. The Rootstock guys we know really well. And of course, that can happen on the Ethereum network. It's a bit of a blockchain war at the moment. That sort of, who's going to come out as a sort of the winner of offering that kind of infrastructure. Functionally, what it does, what it's there to do, and it's all fascinating stuff. That's not our value proposition, though. That's not what we're there to do. We're not looking at the exposure to like the technology for new functional purposes. Of course, we'll monitor and we'll keep on top of that.
Yeah.
We will always be there. But in terms of a value proposition, not the Ethereum network or EVM, but in terms of Ethereum as a unit of value, absolutely people can believe in that, but that's not where we sit. Yeah.
So it's very interesting. You mentioned that the Xapo doesn't believe in fractional banking, and it's very ironic in a way that when I look at the crypto companies like yourselves, for example, where everything is backed and there's no lending and there's no fractional banking, conceptually, a bank like Xapo is way more secure or less risk, let's say, than a traditional fractional bank. What have you find are the challenges when you explain this to people, or when you talk to stakeholders from correspondent banks to other counterparties on this notion of the risks of fractional banking versus an organization like yourself?
Yeah, that's a really good question. I would say that there's a huge lack of understanding in the world, and I wouldn't say that's just as when you open a bank account anywhere in the world, you have a belief or faith in the authority that governs, regulates, and controls the banking standard of that country. If you open a bank account in Thailand, Australia, Singapore, London, or New York, you don't do deep due diligence on the bank and look at its business operations and do any form of sort of internal audit. It's a bank, so they operate to certain standards. Understanding the difference between one and another is very important, but it's not something that people tend to do. And in the crypto world, it's even more exaggerated. So if someone says, I'm a regulated VASP, what does that mean? So depending on where they're based in the world, those frameworks are completely different. So there are many inverted commas, regulatory standards that really are compliance frameworks, looking at, AML, KYC. But, I've also used this analogy before. It doesn't matter how much due diligence FTX had done on every single person that participated on the platform. If you have a lack of, basic prudential supervision, you have no duties or understanding or controls around the segregation of customer assets, if you don't have any proper infrastructure around governance as a basic concept, those risks start to flow through into the business. And I sometimes say, why would you get on a plane with a pilot and your whole family to go to Disneyland if the pilot doesn't have a pilot's license, or get on a plane where the engineers who've been doing the review of the engine or whatever don't learn how to do that on playing an Xbox, you just wouldn't do that. So why would you do that in a virtual asset ecosystem where you have masses of millions of dollars of high units of value that you're basically entrusting to a counterpart that might not really understand what they're doing? So it doesn't really exist in financial services world. Doesn't really exist, but in the crypto world it really exists, and that's really why we talk about equalizing the standards of what we do as a bank to what we do as a VASP and offering exposure to BTC.
What do they're obviously, when it comes to banks that have been touching crypto, many of them have tried, many of them have backed up. There's obviously this negative connotation around it. Why do you think, what is the biggest challenge you've seen with running a bank that has some crypto affiliation that you think you would not have if you were running a traditional bank, for example, that has nothing to do with crypto?
Yeah, I think again it's a lack of understanding. But for example, I mentioned when I got involved in this in 2013 or 14, I had meetings with many authorities, with many banks, with many law firms, and it was always full arm's length. Like, you are doing something that's seriously crazy, and I don't really understand it. And then when you meet the compliance team of a bank and you show them, like, whatever Chainalysis analytics on a transaction history, and you explain to them, look, if I turn up with a $20 note, you don't know where that's come from, but I'm going to show you what I can do. And they see, and they're not convinced overnight, but they start to learn, they start to understand, and they start to develop. So it's a real sort of lack of that sort of core understanding that leaves, I think, a lot of those platforms still quite a long way behind, unfortunately. But it's changed a lot. It's changed a lot. I think the guys that have offered some exposure, the starting point is, oh my goodness, this is all crazy, and it's all has to be money laundering. I mean, it's just completely ridiculous in 2024 to think or say that if you look at the data. But some of them show a willingness to do that. Some of them are now looking at sort of whatever ETF exposure, so not directly to BTC as a unit, but to the price of BTC in a different way. But there are lots of positives and negatives. You can't really be, the Bitcoin community are not going to look to expose themselves to BTC through a wrap product.
I've been through these conversations with many bank management teams, exactly what you mentioned, right? I generally believe right now, crypto firms have probably better KYC, AML, and even transaction monitoring than traditional banks, for sure, right? And it amazes me. It's
counterpart risk as well, right? So if you have your counterpart has proper security standards in place for BTC, and you understand that, and you can understand it well enough to have a degree of security, that's fine. If you wrap it within an ETF, what is your counterparty risk? A lot of people don't really know. They don't really understand what that is, and there are different levels of that, plus costs and fees, right? So, I mean, big numbers. Grayscale started at huge numbers, but it costs 1.5% to own that asset. If you put your BTC on a savings account at Xapo, you earn 1%. Without us even touching your BTC. So that's a 2.5% swing. So that might not sound like a lot, but if you do run that calculation for the last, 5 years or something, it's a big number. So
what's your view on the future of yield on Bitcoin? Obviously, you mentioned organizations like yourself are providing yield, but how do you see this landscape evolving? Do you think at one point it will be common that for any organization that where you custody your Bitcoin, they will provide you some yield, or how do you see this industry changing over the next couple of years?
I think that you will, and I think that's why we've done it. So you will want to match the standard. I mean, look, that's why everything that we do on the banking side of things, we try and match and equalize on the Bitcoin side of things, and that's why we wanted people to feel secure enough that they can earn as close to zero risk as possible yield on BTC. We do that today through the deployment of our own assets. We don't touch a customer's assets, but it's because we want to create that, and that ecosystem is evolving. Lots of the products and underlying infrastructure and services, I mean, they're all developing. There isn't really the liquidity in those markets for like big numbers yet, but it's growing. And I think we'll see more and more of an equalization moving forward. And I think if we had this conversation in 5 years, you'd have 5 or 10 other banks on this call, like saying lots of different things, but we feel like we're right out there at the front in lots of and we do. Another thing that's quite random, Henry, but I think we're a bank, so yes, everyone knows about SEPA and SWIFT and FPS for sterling payments, all the classic payment rails. We have integrated blockchain payment rails to and from your bank account. So USDC, if you send me 5 USDC, it's 5 USD on my bank account. And if I want to send from my bank account to XYZ 5 USDC, it goes 5 USD, 5 USDC. So we believe in the in blockchain infrastructure as an efficient, cross-border, immediate, low cost, and we're doing it. So when people talk about CBDCs, and I'll say, yeah, look, great. If the Fed decides to do that, or the Bank of England decides to do that, or the EBA decides to do that, to get to a stage that a user can actually hold a digital currency on an application and enter into a transaction, there's a huge degree of infrastructure that they need to build to do that. So before Barclays do that, there's a lot of stuff that they're going to have to do, and we're already doing it. So we take that kind of, we want to be at the forefront, not too far ahead, but always maintaining ourselves at the forefront. And that's one of the examples of, I think, how we do that, acting as the merger bridge.
It's very interesting what you mentioned. I think two things that often I think people don't realize. One of the, as you mentioned, Joey, that you guys are not using your client assets. So you're using your own group capital to generate the yield, which I think is very different from other players in the market. And second, that you have the blockchain backend and the backend, which is, I remember I was having a discussion with a relatively large bank a couple months ago, and they're telling me they're looking at this. And I said, well, look at Xapo. They've already been doing this for a while. So I think it's interesting how a lot of these things, people are often not aware of it. I want to ask you
We're just to make one point on that. I mean, like the difference between the conversation with us and a conversation with many of those other banks will be, we are a Bitcoin native business that's got a banking license. We're not a bank that are looking to explore Bitcoin as a concept or blockchain as an ecosystem. We are properly Bitcoin and blockchain native, and that's a big difference between us and a classic bank that's looking to explore new areas of development. So yeah,
I love the blockchain native. The big message from the Bitcoin community for many years was be your own bank. Just self custody, and not your key. If not your keys, it's not your coins, right?
Yeah.
What's your message to a lot of the Bitcoin maxi community on actually the need of banking services that Xapo can provide? Do you think for the foreseeable future we will need such services, or we need a bridge, like you mentioned, and trying to provide what exists in traditional finance to banking, or do you believe some of these individuals are a bit too maxi, and actually you're going to need banking services for a while?
Yeah, I mean, look, I think Henri, I act as the specialist consultant to the United Nations and the UNODC. I train authorities all over the world. The pressures are coming on the P2P layers and not unhosted in the purest sense of the world. But when someone says to me, "I want to be my own bank," I would say, "Well, but that's not what you do with your salary, right? So you don't take your life savings and put them in a mattress under your bed and say, I want to be my own bank and put the assets in my pocket to walk around with." You don't want to do that. So you also want your assets to work for you. So if you put all of your assets, if you took $1 million of BTC on a hardware wallet, what accesses to services, yields, returns, developments do you have to put those assets to work? And what about another thing? What if you want to pay for your kids' school fees or buy a flight to go on a holiday? You've got to have a bridging system. Do you want to enter into a transaction to send it to an exchange, to do a conversion, to send that from there to a bank account, so that from the bank account they might restrict it, then they ask 50 other questions? I just don't really see. But I'm not saying that it's completely right. My view is not that I'm anti self-custody. My view is that there has to be something for everyone. It's a big community of people in the world. So if you go to a wealthy family or a family office, or you go to a wealthy individual that wants to understand the Bitcoin ecosystem, and you start to explain to them, multi-sig arrangements around a hardware device to hold and store assets, and that to get money onto those assets, they need to open an account in exchange, deliver a payment, do a conversion, enter into a transaction, set up the multi-sig. I mean, whatever arrangements you have in place, they're going to look at you and go, you're like speaking another language. So from our point of view, we want to offer that market of people the opportunity to gain secure access. And we have integrated vault systems. So if you put something on your vault at Xapo and you lose your phone and you lose your device and you get hacked, it takes 4 days to enter into a transaction to extract anything from your vault. So I don't really buy like the security argument. I buy the risk. I think there's a lot of risk around the unhosted. And that's not me. You can just Google it and see for yourself all the stuff that's there. So I don't know. I think there's something there for everyone. Maybe the maxis will always stay to that. I'm more believing that, the Bitcoin ecosystem exists, and you want to understand your entry and exit point to that market, and you want to have trust in that system. You don't need to have direct access to that actual underlying network or protocol. You can do it through very, very secure ways that are very simple to use, and that's what we want to do.
And what about the future client? Let's say when you think about the future client of Xapo, right? Where do you see your client base will continue to expand over the coming years? Is it going to be more emerging markets from Latin America to Africa, or will it be on developed world?
I think there's going to be a mix, but I mean, as I say, if you go to Argentina or go to Zimbabwe or go to Venezuela or go to lots of parts of the world and talk to them about Bitcoin price volatility, they'll laugh in your face, because they have underlying currencies that are subject to high inflation, very high inflation rates at times, massive price fluctuations, massive questions and issues. So in those markets, it's got to be extremely attractive. Also in those markets, if you want to gain access to even US dollars, it can be very restrictive, it can be very controlled, it can be very difficult. So I think that's always going to be a relevant market. But then in the modern developing world, we don't service the US. We pulled out of the US. We were one of the first bit license holders in New York as well. We decided against that for various reasons. But I still do see definite participation in the very developed world, because as you say, go to the City of London, a massive global finance center, and open a bank account that allows you to interact with the blockchain ecosystem, or become a blockchain business that wants to engage and have classic banking services. It's close to impossible. So I think because we're from the ecosystem, because we understand it, because we know the risk, we can manage them, we do manage them. I think we also have a big part to play there. Yeah. That's my view.
It's interesting. I would argue that, one of the biggest risks in the crypto community, more holistically, is always in banking system, right? There's a handful of banks that handle the majority of the activity globally, right? Especially for the institutions. And I think that's a big risk.
Big
we
limiter.
saw last year when, when Silvergate signature went down, SVB. I mean, this had a very serious impact on the crypto ecosystem as a whole, right? One thing I want to ask you, Joey, you live in Gibraltar. And also, like from a lawyer perspective as well, there was a time, I remember my first time that I went to Gibraltar. One of the first times I met you actually was a couple of years ago. I think I forgot which year now, but really where Gibraltar positioned itself as a crypto hub, and you mentioned that at the beginning of our chat as well. How do you see the future for, let's say, smaller countries who are trying to position themselves as crypto hubs? Because Gibraltar, to be fair, was a very early entrant in the market. At the time, I remember there was Gibraltar, there was a bit of Malta as well. But now, obviously, you have some of the bigger hubs that are trying to be more welcoming to crypto. How do you see the role that such countries, like Gibraltar, for example, play in the global crypto ecosystem?
That's a good question. I think that sometimes there's a bit of a disconnect between what people read sort of public policy-wise. The government of XYZ said they want to develop a hub. There's a disconnect between that and the actual, regulator, who doesn't really want to accommodate or put in the infrastructure to allow those ecosystems to grow. So the interbalance, or finding the right balance between policy and regulation, is quite a key point, but it's not really there, and lots of different parts of the world. I mean, forget about pre-Gibraltar, there were countries, again, setting the bar too low. So if you set the bar too low, you become too welcoming. You have a very, very simple system for a registration process to comply with the FATF recommendations of 2019. You're going to attract a lot of problem scenarios, and that leads to issues and blow-ups, and then there are allergic reactions to that. And then you have more developed ecosystems or approaches. I mean, MICA and the European approach, they want to position that more as a kind of gold standard. I think there are lots of issues within MICA. That's a whole other conversation. But there, the problem with that is that you have a set of regulations that take immediate effect. How many of the authorities in Europe are fully ready to deal with thousands of applications to be processed through that authority? I don't think that they're ready at all. And I'm saying that because this is a much more global, cross-border, online, digital ecosystem. And I would say there's a lot of value in having a secure base where both the authorities, the government, the industry underneath that understands and supports it in the right way. There's a lot of upside to that, where you can have a real discussion with the authorities who really know what they're doing and talking about. That's very, very, very different to what we're seeing in lots of different worlds at different parts of the world. And then all the other more complex stuff. I mean, again, just because we mentioned MICA, a lot of people talk about the EU and becoming a hub, and there's a massive upside to that. It's quasi MiFID. I mean, you're introducing full-blown financial services regulation to an incumbent developing ecosystem. Finding the right balance is super, super key. I would say that that's slightly overstepping. I would say that the transfer of funds regulations, so how they're dealing with the travel rule. I would say issues around the Data Act and how they're going to deal with smart contracts in the EU. I think there are lots and lots of things there that are going to create pressure points. And I'm not saying that Gibraltar's a sudden sort of magic golden bullet, but I definitely think that it has a part to play. It will not be the hub for the world, and developing jurisdictions will not suddenly be hubs for the world. But it's not critical to be domiciled in London or Singapore or Sydney. It's not critical in this ecosystem. It's much more critical to have the right standards to develop the business in the right way. And I do think that small jurisdictions can play a valuable part in that. That's my view.
100% I agree with that, by the way. I think the way you approach it, even I'm based in Dubai, we're seeing the same thing, by the way, in Dubai as well. So it doesn't matter, and you can become a global hub in a global industry. I just wanted to bring up MICA because, obviously there's a lot of noise around MICA, and you've been following, obviously, the developments around MICA for some time. What is your one piece of constructive feedback on MICA, which obviously you mentioned some of the challenges, but what do you think will be some of the consequences of MICA, and what piece of advice would you have to European policymakers to try to address that?
Look, I think that of course it has lots of positives. Firstly, it's a validation. So in olden days, lots of authorities didn't really want to regulate the space because by regulating it, they're almost taking a degree of responsibility on by validating it and providing a license and comfort to a user that they've met those standards. So that's a huge positive. I think it's setting a very high standard. I think some people like to use sort of, the MICA example as a kind of, the GDPR of crypto regulation. I think it is setting a very high standard, and there will be lots of gap analyses taking place by lots of other countries and what they can improve, or what they should change, or what they should adapt. I think it's very forward-looking. It's very attractive in the sense that the European market is very significant, and to bring passporting rights within that framework, and to allow an entry point to a big market through one single jurisdiction is very, very valuable. But I would say that if you look at the number of VASPs that were registered in each of the European jurisdictions pre-MICA, I won't go into names in case I don't get anything 100% right, but there are some that have 10,000 VASPs, some that have 2,000 VASPs. So that sounds very positive, but I mean, I can tell you that a regulatory authority that tries to process a standard, not just a licensing standard, but a standard of supervision, ongoing supervision, of 1,500 or 10,000 businesses in this ecosystem, that is massively challenging. So, I think there are going to be challenges there, but I don't want it to be all negative, and I do think that it's a very positive step to see, and you've seen the way that the UK has reacted to that. You've seen the way that the US has reacted to that to an extent as well. So, all positive signs.
You mentioned, I want to ask you about one question at the end, but I mean, what's your, as a lawyer as well, like you followed some developments we've seen over the last couple of years, on FATF, for example, is a good one that we've seen with travel rule and many others. What is the one thing you think that policymakers have been getting wrong? Or what is the one improvement, if you were in their shoes, if you were, let's say, running FATF, if you were in
Yeah,
charge of one of these big global committees,
yeah.
what would you be doing differently?
No, I think the FATF have started a conversation, but they're not a regulatory authority. So the FATF are not a regulatory standard setting group. And when they issued the original recommendations in June 2019, registration or licensing were options. If you actually look at the data of how many countries have actually introduced frameworks, a lot of them were simple registration processes. I want to create a secure ecosystem that allows people to participate in, and just a compliance layer does not do that. It doesn't build enough. So from a policy perspective, I would be saying to those policymakers to look at the Iosco recommendations and standards, to look at maybe not direct equivalence. I'm not a big believer in the FSP principle of, same risk, same rules. There are similar risks, there are some more risks, but it's not the same rules. You have to have an open enough approach to be willing to develop new standards, to take advantage of the technology to help you do that, to understand the new risks, to have engineers and technical people involved in the authority that can actually understand the ecosystem, what's happening. So it's a new standard. And if people accept that, they will create a more secure environment. If they don't understand it and they keep trying to define everything as a security or whatever, that we're sort of going a bit back in time a bit, and you're building new ecosystems and trying to fit them into legacy frameworks that just don't work.
I think it's interesting, and you mentioned some of the FSB guidance that come up over the years. Iosco. To be fair, some of these industry bodies, have been looking at crypto for a long time.
Oh, yeah.
Iosco has been looking at crypto for many, many years now, but I think it's going to be very interesting. I think we need a really different mindset
Yeah,
to many of these policies. Right?
even the FATF, if not to go into like forensic detail, but when they published their recommendations in 2019, they were relatively simple. In, I think, October the following year, they already started identifying new things, and they started talking about the principle of market integrity. They started looking at, they made a few points around prudential supervision. So I think they're moving, but when I speak to authorities all the time, and some of them are sort of, when you start talking, the problem that authorities, policymakers, and legislators have is that the ecosystem moves far, far too quickly to track from a legislative development. That's why I'm always a big backer of principles-based approaches, because you need to have law and systems that can emerge and develop. And that's also why I'm a big believer in the UK sort of common law system. It's much more maneuverable than strict sort of civil based systems, and you have to do that. If you think about the FATF in 2019, they defined what a VASP was under 5 headings. A year later, that was out of date. You've got to look at this world in a way that you can adopt standards, and the big guys, the big players in the space, they understand that very, very well, and they do look at jurisdictions. They do their own assessments and analysis, and they'll say, oh, look, that's interesting. X, Y, and Z have directly sort of taken the FATF definitions. So there's huge gaps there, and there. These guys have gone over, but they still miss that. These guys haven't really thought about this. These guys haven't really formed a view yet on a whatever derivative product. It hasn't been made clear. So gap, and the bad actors sort of chase that out, I'm afraid. So yeah.
It's very interesting. I think the world of policymaking is very, very interesting on that perspective. Well, Joey, that's all the time we have. I want to finish up with my typical fire round, round of questions. I'm going to ask you quick questions, and I need 1 or 2 word answers, and we're going to go through them pretty quickly. Hope you're ready. Joey, what amazes you the most? What's the one thing that amazes you the most in the crypto industry?
Pace.
Good point. You spend a lot of time in Gibraltar. What's the one thing about Gibraltar that people get wrong?
There are only monkeys.
That famous rock. You can't go wrong with that. You met a lot of impressive people in crypto over the years. What is the one person that has impressed you the most over the years?
Wences.
Wences is the founder of Xapo Bank.
Yeah.
I would say. By the way, he was on somebody else was on the show recently and was mentioning how Wences was the inspiration for him to go into crypto. So very interesting. You mentioned you're a big fan of kitesurfing. Favorite place in the world to kitesurf?
Tarifa, Spain.
Well, here we go. You played rugby for many years. If there was one rugby team in history of rugby that you think you would want to be part of, which one would it be?
The New Zealand World Cup winning team, the original.
Of course. Here we go. You can't beat that. You guys were recently, Xapo Bank was a big sponsor at the Bitcoin conference in Nashville, where Donald Trump gave its speech as well. What is the one thing that surprised you the most about the Bitcoin conference in Nashville recently?
Adoption. Massive.
Oh, wow. Oh, interesting. Very good for you guys. You mentioned you've done 3 full Ironmans. What's the one advice you give to anyone contemplating doing an Ironman?
Don't do it. No, I'm kidding. Train hard like you've never trained before, and it'll make it all worth it. There's more than one word, but hey.
What is you guys deal with a lot of traditional banks? What's the bit sensitive question? What is the one TradFi bank that impresses you the most?
Ooh, that's a tough one. I'd say DBS.
Really interesting. I guess they're doing some interesting things on crypto. There you go. Joey, there's another tricky one. If you're not in the crypto industry, what other industry would you be in?
Financial services, unfortunately, is where I'd fall back into. I have to just react to say that.
If you go back to university today, what topic would you study that you wish you had studied?
Programming.
Really interesting.
Computer science.
Another one to go back in
Language
time.
of the future, yeah.
If you could go back in history, any period of history, which period would you want to go back to?
Oh my God. The Second World War.
Oh yeah, interesting. Why is that?
Lots and lots of reasons, lots of stories, lots of developments. It's formative years for the world to learn so many lessons.
Listen, before last question. Sam Bankman-Fried gives you a call from prison. What's the one thing you tell him?
Hang up.
And Joey Garcia, the director of Xapo Bank and the chief legal officer. Joey, a typical question, a traditional question, whoever comes on my show. If you could have lunch or dinner with one person, dead or alive, who would you have lunch or dinner with?
Oh my God. Jonah Lomu.
Really? And why is that?
Oh man, just deeply inspirational character. So in the original rugby days, yeah.
Here we go. This is the Mr. Joey Garcia's rugby love comes out. You can see that. Joey, it was great to have you on the show. Where can people find out more about Xapo Bank and about you?
Just xapobank.com, or look me up on LinkedIn, or I'm all over the place. So always happy to connect to people.
Joey, I have to say, I've had the pleasure of interacting in the last decade in crypto with many people, but I have to say you are one of the few individuals who really contribute to a lot in the global crypto ecosystem. Not only with Xapo Bank, actually, but I think even personally from what you're doing on the teaching side, your work with policymakers. I know how much time that takes. I know how much effort it takes. It's time away from family, away from work, but keep up the great work, and thanks for your contribution you've done to the crypto ecosystem.
Thank you.
Joey, thanks for coming on the show today. And thank you guys for all your listening. Hope this was you found it as useful as I did. Thank you so much for all your support. Make sure to guys to also subscribe on my YouTube page. If you like this episode, by the way, give us make sure to follow it, but also check out my YouTube page as well. We have a lot of exclusive content as well. A lot of the content is posted as well, and you can see the lovely video version of this podcast recording that Joey and I did. Thank you very much, everybody, and see you guys all soon for another episode of the Future Money Podcast. See you guys.